Before we get into the details of an example, there are actually two basic ways to get into mortgage investment. As I mentioned earlier, you can go through syndicated mortgages, which means you're making a decision on a single asset and you choose to invest in that mortgage or not, and that's the asset. Or you can go through a mortgage fund, and the mortgage fund is administered, by a manager, and that manager makes those credit decisions for you. But they invest in a basket of mortgages that are hopefully similar to what you're looking at, because that's why you would do it. The idea here is the syndicated mortgage is higher risk because you're choosing. So if something goes wrong with that particular investment, then that's too bad. You lose all your money. Whereas if you put it in a mortgage fund, if something goes wrong, there's a basket of other mortgages that will be operating. So there's ways of recovering your principal and your returns and keep going. So that's the basic difference. Even when you're looking at mortgage funds, there's several different types that you could look at. There's mix, limited partnerships, mortgage investment trusts. You just need to kind of have a good understanding of what you're doing and realize that there's lots and lots of alternatives, and there's lots of different slices of risk you can buy in real estate. Another thing to keep in mind is mortgage brokers and mortgage fund managers have access to different investments. So part of the reason you're choosing your broker or your investment manager is the type of access to different investments they have and the way that they actually underwrite. So you should do a lot of due diligence and make sure that you find somebody you trust and that you can rely on to do their job well. So another little detail you need to think about: if I want to do this as a tax sheltered investment, which means TFSA, RRSP, RESP, this can be done, but then you add another nuance. You have to actually be working with a trust company that is qualified to do these type of investments. Let's just to kind of run it through. So you're going to need a mortgage broker, you're going to need an exempt market dealer, and you're going to need a trust to do a real estate investment in your RRSP, for example. That's the detail, and you need to find someone knowledgeable in all of these things if that's the way you want to go. Dorr Capital does this. We've been doing it a long time. There are many others, but again, you got to find somebody who's knowledgeable and understands what they're doing in these areas.